Hello everyone, and welcome back to Explain the Charts. Today, September 24th, 2025, we're tackling the Australian dollar versus the US dollar, AUDUSD, a pair that's currently at a fascinating crossroads. We'll start by breaking down the latest news, which paints a picture of conflicting forces at play for both currencies. On the Australian side, we've seen a significant boost from stronger-than-expected monthly consumer price index data for August, which climbed to 3%, surpassing predictions of 2.9%. This inflation acceleration is a strong signal that the Reserve Bank of Australia, or RBA, might hold off on interest rate cuts at its upcoming policy meeting next week, providing a tailwind for the Aussie. However, the US dollar index, or DXY, is flexing its muscles, trading 0.4% higher near 97.60, indicating broad US dollar strength. Federal Reserve Chair Jerome Powell recently reiterated caution on further interest rate cuts, citing persistent inflation and labor market risks, creating a challenging situation and suggesting he doesn't feel the need to move quickly on rates. This hawkish stance from Powell is bolstering the greenback, despite some internal disagreement from Fed Governor Michelle Bowman, who advocated for quicker rate reductions to support the job market. Adding to the bearish sentiment for the Aussie, a report from Investing Live on September 23 highlighted that AUDUSD sellers stay in play below the 100-hour moving average, which was sitting near 0.6612. Now, let's turn our attention to the charts to see how these fundamental drivers are translating into price action. Looking at the daily chart, we can see a longer-term context. The AUDUSD experienced significant volatility in late 2024 and early 2025. There was a notable decline in late 2024, with prices dropping from highs around 0.68 to 0.69 in September 2024 to lows in the 0.62 range by December. Then, in April 2025, we observed a dramatic single-day plunge. Let's zoom in on that period, specifically from April 1st to April 7th, 2025, to highlight this event. Here, we see a massive bearish candle on April 4th, 2025, where the price dropped sharply from 0.63256 to a low of 0.6041. This kind of price action, exhibiting extreme volume and a significant percentage change, often reflects a major market shock or a critical news event that triggered a widespread sell-off, possibly an earlier iteration of the largest decline of 2025 amid tariff concerns that was reported in February 2025. Following this sharp drop, the pair found strong support around the 0.598 to 0.600 level and staged a remarkable recovery in the subsequent days, highlighting buyer intervention at these deeply discounted prices. This indicates that while volatility can be extreme, there's underlying demand at certain key levels. Returning to the full daily chart, from May 2025 onwards, AUDUSD has largely been consolidating within a broader range, roughly between 0.64 and 0.66. The current daily candle, as of September 23, 2025, closed at 0.65987. The news today, September 24th, suggests the pair climbed to 0.6630 in the European session, indicating the CPI data has indeed provided some immediate bullish momentum. However, this upward movement appears to be meeting strong resistance. Let's examine the hourly chart to get a clearer picture of recent price action. On the 1-hour chart, focusing on the recent period from September 4th to September 9th, we can observe the tighter oscillations. We see the price attempting to establish a bullish trend, but struggling to break through key overhead levels. The 100-hour moving average, which Investing Live mentioned as a critical resistance near 0.6612, is a crucial level that price has been unable to sustain a break above. This aligns with our most recent 15-minute data ending on September 23rd, which shows the price hovering just below 0.6600, consolidating but unable to push significantly higher. The rally described in the news, capped by sellers, is clearly visible in this struggle around the 0.6600 to 0.6610 area. This suggests that despite the positive CPI data, The overall sentiment is still tempered by the strong US dollar and Powell's cautious tone. Looking at the 15-minute chart from the past few days, specifically September 22nd to September 23rd, we see the very short-term tug-of-war. The price action is characterized by tight ranges and frequent reversals, with neither bulls nor bears able to gain a decisive advantage for extended periods. The highs frequently touch resistance around 0.6600 to 0.6602, while lows find support near 0.6585 to 0.6590. This tightly coiled price action suggests significant indecision and sensitivity to incoming news. The 0.6589 to 0.6598 zone mentioned in the Investing Live report as a near-term support floor is clearly holding in this time frame. For a short-term trade, a clear break and sustained movement above 0.6602 would signal bullish momentum, while a break below 0.6585 could trigger further downside. So, what are the reasons to be bullish or bearish, both short and long-term? Short-term bullish sentiment for AUDUSD could be ignited if the RBA maintains a hawkish tone at its next meeting or if upcoming Australian economic data continues to impress. Breaking above the immediate resistance levels, especially the 0.6612 100-hour MA and 0.6640 ascending channel, would reinforce this. Long-term bullish factors include potential for fresh commercial interactions between Australia and China if global trade dynamics shift, or if the Fed eventually signals a clearer easing cycle, weakening the US dollar. Conversely, short-term bearishness will prevail if AUDUSD fails to overcome the 0.6612 resistance and drops below the 0.6589 to 0.6598 support zone. A continued strong US dollar, driven by the Fed's cautious stance and robust U.S. data, or any negative surprises from Australian economic indicators, would fuel this downside. Long-term bearish predictions from experts about the Australian dollar to U.S. dollar reaching record lows in 2025 due to central bank divergence should not be ignored, especially if the Fed indeed slows its pace of rate cuts while the RBA holds firm. To recap the important price levels to watch. On the resistance side, keep a close eye on the immediate barriers at 0.6611, which is the 9-day EMA, and the 100-hour MA around 0.6612. A decisive break above these could lead to tests of 0.6640, representing the lower boundary of an ascending channel, and potentially 0.6680, a significant November high and 200-week moving average. Beyond that, the 11-month high of 0.6707, recorded just last week on September 17th, and the ascending channel's upper boundary near 0.6730 are key targets for bulls. For support, the crucial near-term zone is 0.6589 to 0.6598, which is the 38.2% retracement of the August rally. Below this, the 50-day EMA at 0.6551 and the bear's target high volume node at 0.6543 provide the next layers of defense. A more significant breakdown could see the pair heading towards the August 21st low around 0.63936. An unbiased prediction suggests that a sustained break above 0.6612 is 60% likely given the recent CPI data, but only if the US dollar's strength wanes or if the RBA gives a more explicit hawkish signal. Conversely, a move back below 0.6589 is 40% likely, especially if Powell's cautious tone persists and overshadows the AUD's domestic strength. Conditions reinforcing these predictions include upcoming RBA policy meeting results next week, Australia's flash PMIs for September, and crucial US PCE inflation and labor market data. Pay close attention to any shifts in central bank rhetoric and global trade developments, as these will be pivotal. That wraps up our in-depth analysis of AUDUSD for September 24, 2025. Thank you for watching Explain the Charts, and make sure to subscribe for more market insights.